Yo, what's up guys? Welcome back to the channel, and today I'm going to show you how to qualify for an Upstart loan even with a low credit score in 2025. So Upstart is different from traditional lenders because it evaluates more than just your credit score. Even if your score is low, you can still qualify by meeting other criterias. And the key factors that influence loan approvals on Upstart are a couple of the following. So pay attention. Let's get into it. So the first is minimum credit score requirements. So yeah, while Upstart doesn't have a fixed minimum score, most approved borrowers have at least a 600 plus credit score. The next thing is stable income. So you need a minimum annual income of 12,000 to be eligible. Full-time employees, part-time workers, and even self-employed individuals, they can all apply. Also, your debt to income ratio. So your debt to income ratio, which is the total monthly debt payments versus your income, this should be lower than 45%. So if it's too high, you got to consider paying off existing debt before applying. And also, you gotta have no recent bankruptcies or delinquencies. So if you've defaulted on loans or declared bankruptcy recently, your chances of approval is gonna significantly drop. So you gotta make sure you take care of those before you can apply. Next is educational background and employment history. So Upstart's AI factors in your field of study and job stability to help you access future earning potential. So if you don't have good backgrounds here or employment history, that might be a problem. But as long as you do, you don't gotta worry. Now, for loan purpose matters, so some loan purpose, for example, the debt consolidation or medical expenses or home improvements, these are viewed more favorably than others, such as speculative investments and whatnot. So, if you're applying for a loan for these purposes, then you have a higher chance of actually getting it. So a couple of tips to boost your eligibility with a low credit score. The first is to apply for a lower loan amounts. So smaller loan requests is going to reduce risk for lenders, so they'll be more likely to give you the loan. Also, you want to include all sources of income, so report bonuses, freelance earnings, or rental incomes. All of that is going to boost your chances. Also, you want to avoid new debt before applying. So large credit card balances can hurt approval chances. So you got to make sure you clear those before applying. And also, you can build a positive bank transaction history. So avoid overdrafts and late payments in the month before applying. And all these are gonna help you out. That's pretty much it for the video, guys. Hope you guys liked it. Hope you found the information useful enough. If you did, like the video, comment down below, let me know what you thought. Share the video with your friends and subscribe to the channel if you haven't done so already. And I'll see you guys in the next one.